Hi folks, David Waring here again with InformedTrades.com and today's lesson of the day. In our last lesson we looked at what a trader can reasonably expect to earn from trading and how most traders' misconception of this ultimately causes them to fail. In today's lesson we're going to look at another important concept in money management, which is the importance of protecting one's trading capital. So let's get started.
Okay, so one of the main keys to successful trading is the preservation of capital. Beyond the obvious point here that if you lose your trading capital, then you're going to be out of the game completely, is the fact that, or often overlooked fact, that it takes much more to come back from a loss than it does to take the loss you're trying to come back from. Okay, let's take a look at what I'm talking about here. Let's say you have an account and you started with a balance of $10,000, and through a series of losses, let's say you lost $5,000 of that initial $10,000. Now that represents a 50% loss on the account. Now that's bad enough in itself, and you're going to be licking your wounds pretty badly there from that loss. But let's take a look at what it's going to take just to get back to the point where you were to your initial $10,000. Okay, so now you're obviously at $5,000 because you took the $5,000 loss on your $10,000 initial account balance. You're going to have to make back the same $5,000 you lost to get back just to break even, or to where you started with that initial $10,000. But instead of representing a 50% gain to get back, like it was the 50% loss that you took, because you're starting with 5,000 now to try and climb your way out of the hole, you need 100% gain just to get back to the point where you took the 50% loss from. So you're going to need to make twice the amount from a percentage standpoint just to get back to break even. So you can see here how this sort of underscores the importance of the preservation of capital, because it's so difficult to dig yourself out of a hole once you get into it. And this is one of the main reasons why traders get desperate when they are in a losing situation, where a lot of the psychological stuff that we've learned in previous lessons kicks in and causes people to start acting irrationally and to lose even more money, or to put on large position sizes and swing for the fences to try and get out of that hole and end up getting themselves into an even worse situation than they're already in. Okay, so this is a short lesson for today, but a very important point. In tomorrow's lesson, we're going to start to look at some of the different strategies that you can use, such as different ways to set stop losses. Once you're in a position to manage and manage against loss and protect that trading capital, so you don't get yourself in this type of situation, and you can be one of the traders that's in the small percentage that are successful, instead of one that's in the large percentage that are unsuccessful. Okay, so the purpose of the InformedTrades.com community is to hopefully put together a community of traders who are interested in learning the market together without all the hype that's associated with most trading education. So if you haven't done so already, I encourage you not only to visit the InformedTrades.com site, but to actively participate. Every page on the site has a comment section where you can share your questions and knowledge in areas where you're knowledgeable. So I encourage you to do that so we can all learn together. All right. So we hope to see you in tomorrow's lesson. As always, if you have any questions or comments, please feel free to leave them in the comments section below. And good luck with your trading.